abruptly ended due to technical difficulties. I'm not sure what happened, but the live stream was cut short. So anyway, we got internet access back and thought I would continue on with some of the questions that we were talking about the neutral rate of interest and how this is very confusing to the markets and what it is that we are supposed to do as far as positioning ourselves, considering that we just don't know where that neutral interest rate is. So as we kind of go through the economy and start thinking about where it is that inflation is going to be in the future, we can kind of understand where it is that the neutral interest rate is going to be headed, whether it's going to be going up or down. Of course, if you listen to the Federal Reserve itself, you're probably going to end up being very confused, go looking at the mainstream media part of things. But if you follow their speeches, you're going to probably get a much better idea of where it is that the neutral interest rate is going, or could be going into the future. And this is really how the Federal Reserve is going to be conducting themselves. As far as like a lot of the stuff that you hear out there coming from the mainstream media economists, very rarely do you ever hear them talk about the neutral interest rate. And when they do, it's usually like talking about how the Federal Reserve's got it wrong, or nobody, some odd number out there that really is just like basically pulled out of thin air, because nobody knows exactly where it's at, so it's just an assumption as far as that goes. So thank you very much for joining back in the live stream. I just wanted to make sure that we covered everything, because we were just so kind of cut that video so short. But it's actually not a bad thing, considering that the algorithm likes really 30-minute videos as opposed to 2-hour long ones. And I think the people actually appreciate those ones better too. What else did I wanted to cover as far as this goes? The inflation that we had experienced, right? Now, whether or not this can flare back up, and this is something that I thought was very interesting, because I do believe that it can come back in a meaningful way, but it's probably not for the same reason that a lot of other people would anticipate. Like, people say that the inflation has gotten out of control, like the Federal Reserve can't stop it from happening. And I do agree with that in a sense. Like, if the whole world was to give up dollars and start sending them back to the United States in a quick and meaningful way, then I could see where that would be an inflationary scenario that would cause prices to rise and also create shortages here within the United States. But that's almost like a doomsday scenario that I although I do see it being a possibility, I just don't find it being like the ultimate outcome. Really, what I think is going to end up happening is just like I was saying earlier, or in the live stream before, is that the investment going into production and supply, right? This is going to diminish, and that's going to actually cause real shortages to take place. I don't feel that the demand from the United States is going to be so significantly cut that it's going to create like lasting damaging effects to the whole economy. Like, ultimately, like, where I feel that the Federal Reserve is going to be positioning the economy, at least from the perception of it, is going to be in a way that is going to have the return on capital investment start to come back into the economy in a real way, in a way that is actually noticeable, right? Because we haven't had that for a very long time. The neutral or the low interest rates really has prevented that from taking place. And if you think about it, like, the return on capital investment really is where an economy can be quite strong, not the stimulating support like fiscal policies or even the dropping of interest rates to try and stimulate the economy, but really the return on investment. And the only way that can really take place is if people cut back on their necessities, right? On the things that they are purchasing, their luxury items, and then start working hard to then invest back into the economy. And that is a very difficult thing to like convince people to just do, like, but really, if you think about it, higher interest rates are really what entices people to now invest back into the economy with that capital investment. How many people have you heard about buying treasuries because of the yield return they get on it? It's quite prevalent out there. All right, moving on here. Let's see if we can find some questions to talk about. All right, do you see a link between the neutral interest rate and the debt load and average interest rates of consumer and corporate debt? Do I see a link between the neutral interest rate and the debt load and average interest rate of consumers and corporate debt? Well, I think if interest rates are higher in general, whether it's through uh, debt payments or anything like that, if the interest rates are higher, the inflation expectation is higher, I think that naturally drags the neutral interest rate up. As far as like the rate in which that it would no longer be accommodating or restricting the economy. If the interest rates remain elevated, not just like for a minute, but like remain elevated for a significant amount of time, as time goes on, it'll start dragging that neutral interest rate up. Yeah. And again, since nobody knows exactly where it is, it's hard to say, but I just feel that, if that was to be the case and we had that interest rates or at least the inflation expectation and the battling of inflation expectations, if that was to be remaining in the economy for a significant amount of time, then that would continue to raise the neutral interest rate. The moment that that narrative shifts, then I don't think the neutral interest rate would continue to go up, right? It may stall out, it could drop, who knows, depending on what it is that the people feel from that point on. Could you incorporate call in questions to these live streams? That's a really, I've thought about that. And I'm going to get like, when I moved into this house, it was really funny. The one thing I didn't check was the internet connections that they had out here. What kind of internet service? And it was terrible. It was a dial-up internet, and nobody could use it. You couldn't do any kind of like streaming or anything with it. It was just out here in the country. Well, they just recently put in the fiber optic line so that I can get high-speed internet out here. So, and that was literally like just a month or two ago that they got it available for us. So I'm gonna get that set up, and when I do, then I could probably just move this into the office area and then set up like Zoom meetings and stuff like that where I can actually do call-ins and stuff like that. Otherwise, I could probably do some like kind of workarounds, just have a cell phone in which that I can, people could call in on, but and just hold a speaker here or something. But anyway, I think that would be a great idea. Also, can you repeat your answer if you have legs? Oh, yeah, I got legs. They work. All right, Simon, do you have any idea how the Fed figures out their estimate of the neutral interest rate? Yeah, in fact, in that video that we just recently did talking about the neutral interest rate, there's an link down in there to one of the Fed banks. Minneapolis, maybe. Anyway, um, in that they talk about R star, and or if you just like research R star, you can go and try and understand how it is that the Federal Reserve figures out R star. I've tried several times, and although I think I kind of have an idea of it, how they figure it out through their mathematical formulas and stuff, there's just like I don't know. Like I really just don't know. And I don't think like even that, even if they came up with a number and said, here's R star and this is what we think the neutral interest rate is, I believe that's really just an assumption and maybe just more of a guideline than it is an actual number. I think over time, looking back, you could probably figure out what the neutral interest rate was, right, at the time. But as far as like this exact current moment, I don't think that's a possible. I just don't think it is. And you could probably get an idea if it's rising or falling, but like, is it like right where it's at? I don't know. Like I couldn't tell you even to begin to tell you how to figure that part out. What's happening, Matt? All right, thoughts on the U.S. being in a recession? Yeah, and this is something that we're going to talk about. Danny Boy, great, you're a member. This is perfect because being a member of the channel, you can come back and watch, either join us on the live stream tomorrow or go ahead and watch that video later. But we're going to talk about the recessionless recession because Kugler did a great speech, or at least from what I can see, I kind of perused it a little bit, did a pretty good speech talking about the supply chains and the inflation expectations and all this other stuff. And what I feel is the recessionless recession that we are experiencing. And I believe that that speech does a great job of actually talking about a lot of the components of what my theory is on this recessionless recession. So yeah, join us tomorrow on that live stream, or just go watch the video since you're already a member. And you're gonna have to be a member of the channel in order to see that particular stream. What about the Fed's cutting of the banks Monday? What, they're gonna cut the banks on Monday? What's gonna happen Monday? Do you think the price of gold is telling us rates need to be higher? I think the price of gold is going to be moving up. Like, I think you can honestly see the price of gold and the dollar moving up together, and it wouldn't surprise me to find a scenario in which that would happen. When you have so much negative talk about the dollar out there, it doesn't leave you a whole lot of safe havens to go to because everything's denominated in dollars. So you're like, oh man, I want to get out of the dollar, but then you go buy this other particular asset, and when you go to sell it, what do you have to sell it in? Dollars, right? But gold is a little different in that sense. Like gold can be carried, beyond what it is that the dollar denominated assets have, right? Because no matter what you end up purchasing, you're going to end up having to sell it off into dollars. But when you buy gold, generally you can trade that for whatever you want, right? It's not necessarily stuck in a dollar denominated form. So gold and dollars could rise together as people are like scared and wondering what it is that's going to be taking place in the future. They'll start moving out of their risk assets into less risky things or things that are closer to cash, right? So you start moving away from like these fancy derivative markets and ETFs and stuff, and you start getting closer and closer to the commodities, and then eventually getting closer to the cash itself, right? Now, the last commodity on the list would be gold and silver, considering that they are like the tried and true monetary metals of history, that it's going to end up being like the most liquid things like US treasuries and even more so just straight up cash, because that's like what everybody is, essentially priced in, right? And then the dollars themselves. And now we got that extra component of cryptocurrencies being in there, the Bitcoin aspect. But I really look at the Bitcoin things and that scenario as really being a lesser, because this is like chaotic situations that are happening when you have the liquidity pushing all the way down to the most liquid assets in things like cash and dollars. Like, I think that Bitcoin would be one of those things people would worry about because it's not like an actual physical item and there's no like guaranteed liability behind it, right? Like the Federal Reserve, this is what's funny about, like, because some people might say, well, that's the same thing about cash, but that's not true, right? Cash has a very unique thing, and this is something that I actually was able to tell G. Edward Griffin, and he questioned me on that. He was like, I don't know about that. And I'm like, no, man, this is true. I've read it, straight up from the Fed itself. And, which is kind of funny coming from G. Edward Griffin, right? The guy who wrote To the Creature from Jekyll Island. Like, I don't think I necessarily schooled him, but I think I gave him a little bit of information that I don't think he was quite aware of. And that is that the Federal Reserve note itself, right? Each one of those notes is written by a different Federal Reserve bank. Right? Each one of those notes is a liability of that particular bank. It also represents the first lien and paramount right to the Federal Reserve's balance sheet if they were to go bankrupt. Now, this is something very interesting to think about, because if you have Federal Reserve note cash, not some bank account, not something that's priced in dollars, cash, folding Federal Reserve notes themselves, cash, that is first lien paramount right to the Federal Reserve's balance sheet, meaning that you show up to the door when they're going bankrupt, or however that works. I don't even know if you could, but the idea behind it is there. You show up to that bank, right, with those Federal Reserve notes themselves from that issuing bank. You have right to their gold, to their SDRs, to their balance sheet, everything that's on it, right, in order to get your, to make up for the liability that they have. That is written down in their own documents from their own words, right? So now that gives cash a little bit higher priority over just about anything else out there when it comes to the risk of it, right? Because believe it or not, the Federal Reserve does hold gold and assets that are beyond what it is that are dollars. And this is so strange of a concept for a lot of people. Like I said, I had even G. Edward Griffin going like, what, bro? I don't know. He would give me that kind of look. And then we moved on to another topic. But anyhow, that took place. That took place at Hell's Kitchen. Do you think price of gold? Okay, there we go. Good evening from Germany, UE. What do you think about this big German chemical company, BASF, closing its subsidiaries in Germany and moving to the US? Well, that's it. Okay, so that's something pretty interesting to think about. Getting your production closer to the consumer itself, right? And now this is one of the ways that, this is one of the ways that tariffs can actually benefit the people themselves, because this is what ends up happening from it. And And a lot of times when I talk about the manufacturing here in the United States, like kind of going away and getting damaged, very rarely do I bring this particular concept in to the idea, because I just don't see where how prevalent it can really be. But if time goes on, it may end up being the case in which that it would cause manufacturing to come back into the United States in a meaningful way. But I find this to be very short-lived. And now the idea behind this is that if you put enough tariffs, right, on a particular company, and their consumer, their market is in the United States, well, if you can move the production to the United States itself, you can bypass those tariffs. So now the production that's taken place within the United States is a benefit to a foreign nation. And we are experiencing this right now within the lumber industry. Like, down in the southern part of the United States, there is a glut of pine trees, right? There was all these plantations down there that had planted a lot of like pine with the idea that this particular timber was going to be in high demand for lumber consumption, right? Well, there was an overproduction or an overproducing of the pine plantation. So now there's this glut of trees that are taking place down in the southern part of the United States. Well, at the same time this is happening, there's a shortage of trees or a depletion of trees that are taking place in the British Columbia area of Canada, right? So here you got this Canadian mills up in this, what used to be, and still really is, an incredibly prevalent timber industry that has been depleted significantly. These are huge mills up there. I mean, these are the biggest mills, some of the biggest mills in the entire world. They're operating up in Canada, but now they're finding that where they're operating is depleting. So like, just like any fisherman, you're going to fish where the fish are, right? So now they're going to move their operations out of the British Columbia area, or a significant amount of them, and down to the southern part of the United States. At the same time, these tariffs are hitting the Canadian lumber industry, which only incentivizes more of this to take place. Now, the production that's taken place here in the United States is benefiting Canada. All right? See, this is, I mean, but we got manufacturing and jobs here, you know, that's cool. But how long this can last and how prevalent of this spreading into other industries out there, I think time will tell on it. And whether or not it's significant at this point, I don't see that being the case. Like, I don't hear about a bunch of companies like moving production to the United States to avoid the tariffs and to avoid stuff like that. In the end, I think that's actually going to end up being more damaging, as once either the tariffs are relinquished or whatever, to try and get the manufacturing here exported to the rest of the world, because if we're putting tariffs on them, they're going to put tariffs on us, right? So if you want that manufacturing to leave the United States and be a benefit to the world and start bringing in the new money, you have to lower these tariffs. And if that starts to take place, manufacturing is just going to leave the United States altogether, right? So no matter what, I mean, I think it can like force particular outcomes, but I don't think that can be sustaining. Right? Did I get all that right in the way I explained it? Gold is suppressed 10 times. Reverse repos pot running low. Also, Fed's current bank lending stops on the 11th. Oh, you're talking about the bank term funding programs and stuff like that? Yeah, I'm not terribly concerned. Like, this is not... The repo facility and the bank term funding program did not exist in 2019, all right? Neither one of those things. In fact, it was September of 2019 that the standing repo facility wasn't even a standing repo facility, but the repo facility fired up in a meaningful way and ended up becoming a standing operation for the Federal Reserve. This is not something that was very typical of the Federal Reserve prior to 2019, prior to that liquidity crunch that had taken place back then. So to me, like, we are operating in what they refer to as an abundant reserve system, right? But prior to 2019, they were in a limited reserve system. They didn't need the repo facility at all. That thing was completely drained. The overnight lending rate between the big banks and their limited reserves would be where the Federal Reserve would establish the effective fund rate. So before they even had the repo facility or anything else, right? See, now they're going to get rid of the repo facility, and they're going to try and take the stigma off of the discount window, right? This is a whole nother concept for the Federal Reserve and in the banking industry. The discount window is where like banks go to get liquidity from the Federal Reserve, But if they go to the discount window, everybody points the finger at them and says, dude, what's your problem, man? Yo, what are you doing, man? You're at the discount window, man. You're sucking, yo. Right? This is how everybody feels about them. So they don't go to the discount window because if they go there, everybody looks at them and says, dude, you're in trouble. Why else would you be there? Right? So they're trying to take the stigma off the discount window, saying, no, 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 man, this is a cool thing to go to. In fact, it's very hip to be at the discount window, man. Come on over and join the game, right? And so this is like what they're going to end up doing to the whole of the banking industry, is to try and make the discount window the place where they can go to get the liquidity that they need, as opposed to this operation with like the repo facility. I don't know, does that make sense? Okay, and the bank term funding program, that's another one, right? So everybody says once they take this bank term funding program away, all these banks are going to end up missing out on their ability to get liquidity. I don't believe that, because the Federal Reserve has been in communications with the banks to adjust their balance sheets to be more resilient to shocks that happen, right? So when the stresses come to the banking industry, they have put these banks in a position, or told them to, and regulated them, or however it is that they are operating with them through their communications, had them adjusting their balance sheets so that the assets that they have on those balance sheets are liquidable during stressful moments, so that they don't face the same situation that SVB Bank did. The bank term funding program gave them the cushion in order to acquire the capital that they needed in order to maintain their, deposit levels, and, making sure that they don't run like, offset their balance sheet with their assets and liabilities. They gave them the ability to get cash based on the assets that they had, even though the value of it, like the market value had dropped significantly. Geez, I'm stuttering. Had dropped significantly. They were loaning money on the like the face value of it, like the maturity value. So these banks had access to capital that they typically would not be able to get through this bank term funding program, and then adjusted their balance sheets to become more resilient to stressful moments. And this has all been done over the last, year. So the Federal Reserve has not been like, oh crap, we don't know what we're going to do once this happens. They have definitely been positioning themselves to deal with the fact that they are going to end that particular program. And with the repo facility coming to an end, and then trying to change the narrative on the discount window, to me, they're preparing for it. Like, this isn't going to be that dramatic of a moment. I mean, if I can describe all these things, the Federal Reserve is talking about it in a more meaningful way. Like, I'm just barely getting the gist of it. So you can think about, like, how it is, how intensely the Federal Reserve is actually, dealing with this problem, if it is even a problem to them. All right. It's why countries are stockpiling. Oh, Benny, what do you have to say? They are shutting off bank term funding program on Monday, Simon. Yeah. And see, that's why I didn't think of it as a big deal. It's just like, because like a lot of other people want to make that a big deal. And to me, like, I mean, I can see where it could be an issue for some banks out there, but I believe that the majority of the banks are going to face it. The bigger issue is going to be the commercial real estate. That's probably going to start dragging a lot of banks into some serious issues, personally. Like, that would be the one that I would be most concerned about, is like the credit default swaps that come from the failure of the like commercial mortgage-backed security market, because that derivative market is like a shadow banking thing that nobody knows how big it is. And once those insurance policies start to kick in, like, who knows how big of a bombshell that could be. Like, that boy, your mind can really spin on that one. All right, I just got a super chat. Let's go check that out. All right, the infamous NYC. Thank you so much for the $10, man. All right, Venezuela loves Chavez when money flowed, but hated Maduro when inflation set in after Chavez died. Like how they loved Trump when money flowed, but hated Biden when the inflation came. Yeah, it's that's all pretty interesting, that whole thing, because I think about that a lot when when Trump was in office. And here's the thing. When Trump was in office, he talked so negatively about the Federal Reserve. Like, he wanted to fire Jerome Powell. He said, like, he's just like, just hated it, hated everything that they were doing. But yet the monetary policy at the time caused the economy to be booming. Isn't that interesting, right? Like, the monetary policy at the time had everybody just like and loving it and the money. They were just like this cruising. They were all so happy with everything that was going on. Oh, Trump, he's so awesome. But yet the monetary policy is really what was causing this to happen. Not the fiscal policy, right? I mean, there was some tax breaks and other things that, got the corporations, but it was the monetary policy that was really in effect, right? And it was Trump who was saying, nah, this monetary policy sucks, right? But yet the outcome was much different, right? And so this is what I find very humorous about that. Like, I just look at that whole thing and I think to myself, so at the time that everybody said that the economy was awesome, Donald Trump was very critical of the Federal Reserve's monetary policy. Very interesting, So what would it be like if we had Trump's monetary policy? I mean, nobody knows. I mean, would it have been that much awesomer considering that he wanted the Federal Reserve to go into negative interest rates and print money? I mean, does that sound right? Just saying. I mean, thank you for the $10 too. What does that say? Gig workers creating lots of jobs. Single persons could have 5, 6 gig jobs. They're lying about job market. It's a sad economy. Well, I think about it. There is a lot of ways to earn money. I mean, nowadays, especially online, there's all kinds of ways. I mean, even I don't know why it's taken me so long to get the Amazon Associates thing up and going. Like, all these guys, everybody's doing it, and so I'm like, well, yeah, how hard is it to put a link down in there and offer up a product, and then the money, just like, it's a little bit of money that trickles in, but you can do that on so many little things out there. Like, obviously not everybody's going to have a massive, social presence in which that you can do that on, but really you don't need to do it on such a significant level. I mean, as having like a 100,000 YouTube channel, there's all kinds of places out there that you could go to try and make money. And it's like surprising me, even when I start diving into it, it's just like, man, it's just really pretty much everywhere. Like, money flies around everywhere if you know how to go out there and just grab it. And and if you work on it over time, you can make it significant. And that's what's really interesting about it. Like, a lot of people don't look at, like, when I think about making money, I don't think about how much I can make. Like, to me, that's not the important part. Like, the amount is like, it's not really that big of a deal. What's really important is how you can get it done. Like, if you can make $1 happen, and then you can turn that into $2 and then to $4, that's it right there. That's what you're looking for. Because if you can start doubling that up and making it bigger, that's where, like, the real passive incomes or the possibilities to it, anything that you can do to, like, scale up, right? Or make it passive. Like, I put out a video and then it can generate some money for the next day. Put out like the links or something to an affiliate sale, and then that can make money going on throughout the rest of the day. These are the type of things that you look for, and you start off small. If you can even just make $1 with it, then you can double that up. You can just put your efforts into it and make it $2, make it $4, make it $8, and then pretty soon you're making, who knows how much you can make, $80,000 a month or some crazy thing, All right, my capitalist mind is thinking, how can I profit off this bank panic the news will set off on Monday? I think it's going to be a non-event. I really do. I mean, I think that, I mean, some people are trying to make it into a big deal, but I don't think it's going to be as big of a deal. Otherwise, the markets would be freaking out already, And, maybe that's one of the reasons why Bitcoin is getting pumped, why gold's getting pumped, is because of the anticipation that this is going to be a bigger deal than it really is. Maybe it is going to be a big deal. Like, but I just can't imagine, like, the Federal Reserve going, oh man, we just destroyed the economy by turning that thing off. Oops. Like, I don't see that happening, Like, the last thing they're going to do is freeze the financial system up and go like, oh crap, I didn't mean we did that. Like, if they have to turn it back on or fire up some other program without them being prepared for some kind of financial shock, then they will lose that credibility, right? That confidence within the people that they can keep the finances flowing, right? uh, Dishes, okay. Oh, Benny, you remember when Simon said about slicing off his own unit? Benny, why do you have to be so weird, man? All right. They did in a sort because oil was high and they controlled a huge flow of oil until oil prices fell and the people plunged into poverty. The snowball effect. They are looking into gig jobs, contractor with W-2 employees. Feds must believe they're missing out on tax revenue, gig workers. The federal government, yeah. I would imagine that they probably are. I mean, you can imagine like there's a lot of gig work going on out there, but ultimately that would be tracked, I would assume, especially if you're doing like, anything through, like DoorDash kind of things. All right, I've been buying a bunch of silver and constitutional silver lately. I think people may want it at some point. Well, Raven, I certainly don't, I wouldn't discourage you from buying silver. I mean, I try to pick that stuff up as often as I can. But as far as the expectation that other people are going to end up like wanting that in a major way going into the future, like causing the prices to move up, I I I kind of lost the thrill for that one quite a while ago. I use my silver as an insurance policy. I consider it, something that I have that's outside of that third party claim, something that gives me the ability to sleep at night, not really caring what ends up happening within the financial system, what happens with governments, what happens out there. It's just really inconsequential to that silver holding. So to me, it's not something that I'm looking forward to selling off in the future. To me, it's something that I'm just looking to stack as much as I possibly can on. And so if less people want it, that's actually a pretty good deal, because then you can load up on it. If silver stayed $25 an ounce until I was 80 years old, I would love that. And then go up to like, five, 600, $8,000 an ounce, then it would be cool, right? That's what I would love to see come out of silver. But until then, if it stays low, sweet. I am thinking that is probably one of the coolest things that we could ever possibly have for ourselves in securing our wealth, because there is very little downside risk when it comes to silver, considering the price level comparatively to gold. Like, if they pull it out of the ground 10-to-1 ratio, it should put silver right now well over $200 an ounce. But yet here it is at $25 an ounce. So load up on silver, just keep stacking it and don't really stress if somebody else wants it or doesn't want it. Just get as many ounces as you can get. Yeah. All right. So glad you ditched the penny stock advertisement thing. Well, thanks, man, because I did. And I'm just going to push, like, you guys got to sponsor the channel. That's it. Like, that's what I'm going to do is I'm just going to use my channel here to, get the viewers to sponsor it, whether it's through the members only video, through the purchasing through Amazon, through the buying of my merchandise, through donations through PayPal, whatever it takes, right? This is because I don't want to do the sponsorships. Like I get it all the time. Like you guys don't even realize like how many people want to sponsor the channel, want to send me money for me to talk about their product and get paid a lot of money to do that. And I can see how all these other YouTubers who have a third of the subscribers that I have make a hell of a lot more money than I do on YouTube. Like I could be making a lot more than what I do by taking the sponsorships. In fact, I could be done working now. Like I'm pretty sure that if I had taken every single sponsorship that anybody had ever offered me, I would have all the money that you could ever possibly want, right? Or not want. I mean, there's some people who want a lot, but you know what I'm saying, right? But I don't do it because it's not feeling good to me. That's not what this channel was based on. It's not what I was trying to do with it. Started this channel to learn. That's what I wanted to do, was figure out what was going on in the economy so I could best position myself. And I didn't really do it so that I could make a bunch of money by getting sponsors. So you guys sponsor the channel. Like the viewers do it. Like I'm not going to do sponsorships from some company that I don't know. I might sell some Amazon stuff or whatever, but that's you choosing to buy it and I get a little commission off of it. That's like that's the way I'm going to end up doing this. And if it takes me longer to make the money, then so be it. That's what I'm going to do. I'm going to develop a course. I'm going to build a very significant, real course that people would really enjoy, that is actually going to be time lasting. And that's going to be the other thing that I use. But outside of that, I don't know how else I'm going to end up making money on this channel outside of the advertising that comes from the AdSense and, you guys doing what doing your part. So, all right. Bitcoin price has in the past been correlated with the rise in S&P. If the market goes down, will Bitcoin price sustain itself on its own? Just curious from your perspective. Tom, I have very, very, very little expectation of Bitcoin. And honestly, the volatility that's within it doesn't give me any belief that I could predict what it is that the prices are going to do going into the future. Like, I do not try to do that. I try to buy Bitcoin once a week, every other week, once a month, $50 at a time. I don't really think about what the price is at the time. I just throw a little bit more into it. My ultimate goal is to have one Bitcoin. When prices are at $70,000 a coin, I don't feel real confident that I'm going to be able to get there. But when it drops, significantly, then, I load up on as much as I can. But I don't really have any idea of what it is that I expect out of Bitcoin. Like, if it goes up to $1 million, then I would probably borrow money against it. Like, I would try and keep the Bitcoin as much as I can, borrow money against it, and, try and buy assets, like dividend paying assets, or, some kind of investment paying assets. But that's what I would do with it. But my hopes and dreams for Bitcoin are so low and insignificant. Like, I don't even care where the price goes at all. Like, zero care. If it went to $5,000 next week, I would be cool with that. Everybody would talk about how it crashed and failed and no good or whatever, and I would be buying $50 a week. All right, another super chat. Let's go check that one out. Hey, thank you, Nothing Here, for joining the channel. You're going to really enjoy tomorrow's live stream. It's going to be a good one. Dominique, $4.99, happy to support. Well, thank you so much. I really appreciate that. You guys are so awesome. You've always been generous, and it's hard for me to come out there and say, hey man, send me money, because it's just I feel like I'm e-begging or something. But, considering that I just pretty much deny all the sponsorships that are offered to me, this is the only way that I can really do it, is just by, suggesting it out there and giving you something to purchase. All right, hit the button, guys. You won't be here if you aren't a fan of Simon's theories. They should have twice the likes. Yeah, well, thank you. And that's the other way. You don't have to send me money. Just by simply hitting the like button, leaving a comment, sharing my videos, all that stuff is super supportive of the channel. In a major, major way, more than you could possibly imagine. Just by doing those three things, hitting the like button, putting a comment down, and sharing the video is huge. It's huge, huge, right? Because if everybody did that, it would be quite significant to the channel as far as, spreading the information around and stuff. All right. Is there any more questions? Let's talk economics. All right. People in the chat emulate the wholesomeness you exhibit. Well, thank you, Eli. I really appreciate it. I mean, you guys have always been very supportive of the channel. Even since the early days, the things I got wrong, things I got right, just my theories in general, the lumber industry, everything that I have done on this channel, you've witnessed it. You've been part of it the entire time. And so, this has been a life-changing thing. And to me, I didn't know this was supposed to happen. I didn't know it was going to happen. I don't know what I was supposed to do when it was happening, We've been over this. Yes, Benny, we have. You're right. All right. People in the chat. Oh, we already read that one. Simon AK, e-bag. Okay, yeah, I know. I just said that, Benny. Benny's our resident troll. He's actually pretty funny. All right. I think the reason your information is so good is because you don't take sponsorships, Simon. Financial ties could judgment. You're absolutely right. One of the things I really wanted to do the sponsorship with ITM Trading. I really did. They offered a really great sponsorship You didn't even have to buy anything. Like literally, this was one of the coolest sponsorships I had ever heard of. They were literally just looking for leads. So they would pay me if you just gave them a call and had a discussion with them. And that was like, I thought, man, this is so awesome. You don't even have to buy anything. You can just go and just talk to them for a minute and then I get paid for a lead. And I was going to do it. I mean, I really was. But then I got to thinking about it. It was just like there's times when I don't talk positively about gold. And they said you can say anything you want, we don't care. Like they literally said that we do not care about that, right? You say whatever you want if you want to, whatever your opinion is, right? And they didn't tell me that I was like I had to talk about particular topics. None of that stuff. I mean, they were very cool about it. But the problem that I was already facing is that I would want, because I would get commissions too, is that I would want people to go and make those purchases, right? And so therefore I would start talking it up. And I'm a good salesman, so I would start talking that way, and I would start thinking that way, and subconsciously I would start making videos that would start doing that. I know that was going to happen. And so because you can't help it, right? I mean, if you're going to try and make money, then and you see that money happening, then you're going to try and encourage that. You're going to try and push that, that envelope even more. And so eventually I would end up being into like, new world order kind of concepts that they're going to completely destroy your life if you don't go and dump all your money into gold tomorrow. I mean, that's essentially what those people end up doing. In fact, I think it's so funny. Like, I don't mean to call him out because he's probably one of the coolest people out there when it comes to economics. But I was looking at a Peter Schiff statement the other day talking about how you need to sell all your Bitcoin and buy this gold bar or something that he has available, and talking about how rare this gold bar is, and as opposed to how rare Bitcoin is. And I think to myself, yeah, this is the same guy who told me that, yeah, go ahead and buy Bitcoin if you don't mind losing money. I mean, he straight up told me that to me. Yeah, like not like I heard it somewhere else. I mean, I asked him the question and that's what he replied back to me. Actually, I just told him, I said, I buy Bitcoin. He says, yeah, well, buy Bitcoin if you don't mind losing money. I said, okay, well, I don't really have any expectations of it, so whatever. And now here I am sitting in a bigger portion of my portfolio is now in cryptocurrencies than anything else. And I didn't even mean for that to happen. Right. So like, I don't know. Like I trust myself. I trust myself over anything. Uh, if deflation Armageddon for the Fed, is deflation Armageddon for the Fed? Yeah, deflation is their bigger concern. It definitely is their bigger concern, and it's not deflation. It's deflation at the lower bound. That's the scary part for the Federal Reserve because they run out of monetary policy. They have to use these unusual tools like forward guidance and quantitative easing and these like really odd like the special purpose vehicles and stimulus packages and stuff like that. Just wait till the next one. If they run into like if they run into the lower bound again, if they go into like, oh, we're going to gradually lower interest rates, which I don't know why in the world they would do that. Like, that doesn't make any sense to me whatsoever. Like, never have the Fed ever gradually lowered interest rates to like, the zero bound or something. It's an economic shock. So they're going to hold on to the interest rates is like their power, right? And they're like, they want to give up their power, it's just like they want to hold on to it as much as they can. If anything, they would like to get more of it back, And so like the idea of them lowering interest rates into the future is like in a slow kind of methodical path. I don't find that to be the case because once they hit zero, they have to go back into unusual tools, like the quantitative easing and forward guidance and all this other stuff. So yeah, deflation is their nightmare at the lower bound of zero. When you have plenty of interest rates, no big deal. Oh, Benny. Okay. You must have missed the penny stock pitch, Brody's. Benny, at least you're here, man. I appreciate you here, and commenting. I thank you. Did you hit the like button too, Benny? Yeah. All right. I think it's sincerity that because most valuable thing during times of economic twist. Yeah. My 2002 Dodge is still hanging in there. Good for you, man. Resident troll Jester Benny is a fun addition to the fam. I agree. I do agree. Uh, Gold was a good buy at 1200. Happy to be here and provide a few laughs and some perspectives. Uh, um, that's where things get weird, where you begin dealing with moral code regarding future sponsors. Yeah, and so I don't have to deal with that if I'm selling my own stuff, right? Buy my shirt, buy my hat, buy my, go and buy something for yourself from Amazon, use the associate link, right? Just if you click on that link to the Cantillon essay, once you open up that link, anything that you put in the shopping cart for the next 24 hours is, I get credit and commission for. So that's pretty cool, right? So just go and open up that link before you go and do your shopping on Amazon, and, the UE will get a little bit of credit for that. Give it, join the live stream. The members only live stream. That's the thing that I would really love to push. I would like to have like 10,000 members to the live stream. If that would be like so awesome. That would that would just do it for me. You know what I'm saying is if I had 10,000 members to the live stream, something very simple, $1 a month to the viewers, it's like almost inconsequential to you, right? I mean, it's $12 a year. Yeah, what are the, like, $120 for 10 years, right? 10 years you can watch the Uneducated Economist for $120 is all it would cost for the membership of it. And I don't know where else you can find a deal like that, right? And I mean, it supports the Uneducated Economist, so more e-bagging. There you go, Benny. All right. Okay. We won't think any less of you if you do sponsors. I know you won't, Matt. I mean, I know you don't, but there's plenty of people who do. And when my email fills up with like hateful comments and, just whatever, and this is the way I feel from it. Like, it doesn't feel good, It's like, it's not information that I would typically try to put out, and I'm putting that out to get it. So, like, I'm going to do sponsorship kind of things, but it's going to be on a very limited thing that I would do, like something that I feel like is really appropriate for the Uneducated Economist itself. Never mind, I'm not going to tell the story. Is there any possibility of the BRICS gambit being successful? Follow-up question, why not? I do believe over time that the BRICS will eventually have their position in which that they can, actually have like a world dominating effect. But the problem is that not one single BRICS nation can do it. So they would have to join together in a fashion that means that they would not backstab each other, right? And I just don't see where those nations are that, like, I don't think that they respect each other enough to not do that. I think every nation would be, into it to be just slightly better advantaged than the rest of them. And I think any nation, anybody, any business person would do that. Like, if they had the opportunity to do it, that's what they would do. So in order to work symbiotically in such a fashion, in order to like be that capable of actually becoming the world dominating power, is going to be very difficult for them to pull off, right? So generally it's probably going to end up coming down to one of those nations that is really successful at doing it, and they are going to be the ones who are like the economic power, right? And a lot of people were looking at China or possibly India or, something of that nature. However, if you want to take over in the same fashion that the United States is already operating in, it's going to be a very, very, very difficult road. It's going to be so hard to do this, right? And the main reason is that everybody already has so much trust for the US dollar and the US treasuries. And that right there is very difficult to beat, right? Nobody trusts China. Nobody really trusts India. Hell no, nobody's trusting Russia, right? I mean, there's no trust that's taken place in there that is like that of the United States Treasury, and the fact that it will definitely pay, right? So the U.S. Treasury is the dollar. It is the asset. The one thing that really does world trade is the fact that the United States Treasury exists, because most of the time when world trade is done in dollars, they're generally doing it in U.S. Treasuries, right? Because U.S. Treasuries pay at least a little bit of interest, and cash sales or cash transactions trying to move from one nation to another can be difficult and costly, right? So U.S. Treasuries end up being what's mainly used for those world transactions, for the world trade. So now, if the U.S. Treasury is to be replaced, you have to have another country that you trust enough to issue that much debt, and they would have to be willing to go into that much debt, And there's no nation, especially the BRICS nations, who all want to be the producers, to want to say, okay, we'll become the consumers and we'll be the debt issuers from now on. Like, there's no nation, none of the BRICS nations want to be in that position. They all want to be the producers because they want the new money coming in from their production, just like any nation would, like anybody does. Nobody, like, I mean, sure, everybody would love to have a credit card that they would never have to pay, but they all know at the end of the day that you're going to end up having to pay this credit card. Only the United States seems to think that they can't, right? Or that they can just roll it over into another one, even though that language will be changing soon. But this is the problem that the BRICS nations are going to face, right? Is that there's nobody out there willing to do what the United States is doing, and that is issue out that much debt and then import everybody's products, right? Because that way you can get the dollars out there to the rest of the world, and that's what creates the world currency out there. It's Triffin's dilemma. Like, once you understand Triffin's dilemma and you look at the BRICS nations, there's no way that they can fit into that world trade in the same fashion that what the United States is providing. They just, like, it can't compete, right? And so even if you brought up another form of currency, okay, it was just like, well, you got dollars out there, obviously it's doing its thing, it's very hard to compete against, but we have this other currency out there that's still, it's possible, right? I mean, it's like another currency that can do transactions. Already, like, the United States dollar doesn't do all the world's transactions. It does, like, what, 50-60% of it or something like that. I know that's fallen a little bit. I don't know exactly what that number is. But second place is so far away from what the dollar is doing that it would be impossible. Even if they were to triple or quadruple, all the amount of transactions that are done in those currencies, it still wouldn't be enough to take over the dollar, right? So they have a long ways to go before they even come close to doing what the dollar does. But let's say it does exist, right? And so we have this dollar, or this secondary currency, that's competing against the dollar. Now, you got the two. What happens? Gresham's law is going to kick in. One of those currencies is going to be better than the other. And if they both get used, what ends up happening, right? The good one starts to get hoarded away. Now, let's assume it's the dollar and this other one is taking over, and the dollar starts to get hoarded away. What happens to the dollar value? It starts to move up. What happens to all the dollar-denominated debts that are out there, right? They start getting very in trouble, right? This is where the foreclosures and the defaults and all the other stuff starts to take place as the dollar starts to strengthen. As the dollar strengthens, you're buying up assets like you wouldn't believe, right? Okay, so that's if it's getting hoarded because we have two currencies going on out there. But let's say that it's not a good currency, that the dollar's not the good currency, but the good currency is being introduced. BRICS are introducing gold. You got gold going into circulation now. Well, same thing is going to happen in the opposite way. All the gold's going to get pulled out of circulation, won't get used for transactions. Dollar's still there. Okay? See, this is the problem that it's going to face. The dollar literally has to collapse completely in order for another currency to come in. This is why, like, the BRICS can set themselves up and wait for that to occur, right? Try to do their transactions, but then the moment that the dollar fails, other competing nations out there are also going to be going up against the BRICS nations. Okay? And so whoever the most industrious person out there, whoever it is who can produce the most, whoever is the best fighter, right? Somebody's going to end up being the outcome, who's going to end up winning that outcome. So very difficult, right? Very difficult process. They just can't come up with it and say, hey, we're just going to do this. Either they have to take this very, very coordinated effort to trust each other, or the dollar has to fail. Like, and I just don't see where that trust level can be there. I mean, not enough, not as significant enough. Not with those nations. All right. So we're almost an hour into this live stream. Oh, hey, we got another super chat. Let's go check that one out. GJ999. Hi, Simon. Are you familiar with Tom Lonongo? I'm not. He got an interesting theory that Powell is keeping rates high to sink Eurodollar and preserve the American banking system. I mean, I think that's happening. I mean, in the sense that once the dollar, like, if you pull the liquidity out of the system, you think about it, the Federal Reserve right now is in quantitative tightening. That's pulling dollars out of the system, right? So if there's less dollars out there, then there's less dollars to go and pay all the debts off with. So now you have an issue that's taken place out there where all these contracts around the world, right, are written in dollars. Those contracts get used as if they're dollars. So now if you are in a situation in which that you have the inflationary scenario that is causing prices to rise and you need the dollar to strengthen up, right? Well, then you create a situation in which that the dollars are less available outside of the United States, right? Well, all of a sudden, these contracts start going into default. Well, that's demand for dollars that starts to rise significantly. And that will put downward pressure on inflation, right? As it starts to strengthen up the dollar. Just simply by pulling the money out of the system, and not even out of the United States, just trying to pull it out in like you pull it out of the banking system and you start creating less ability to take out loans, right? Then that's less new money going out there to the system. Right? You don't even really have to take money out of the system. All you have to do is just create a situation in which that less loans are being issued. And if you have less loans being issued, then you have money velocity slowing down. Again, you don't even have to take money out. You just have to slow money velocity down. And money velocity gets picked up when people get encouraged by taking out loans and going on vacation and buying houses and cars or whatever, right? This is really where, like, I mean, I'm just kind of going off of the statement there, but this is kind of what comes to mind when I think about it, is that if you can create a situation in which that the velocity of money slows down due to the fact that there's less loans being taken place. If there's less loans taking place, there's less money going out there to the rest of the world, and that's where the defaults start to take place. Right? So, anyway, moving on here. Let's see. We're at 56 minutes into this. I'm not sure how long we're going to go for. We got 120 people watching right now with 71 likes. I love it. Do you invest in emerging markets like Vietnam and Mexico? I don't. Personally, I haven't. Like, I invest in very limited things. But a lot of people, you have to realize, like, I didn't really have a whole lot going on a few years ago, like nothing. And then most of the money that I made, I saved to put down on the house, to pay off like past debts, to do all that. And then since then, I mean, I was able to build up a fairly significant, I feel like, a fairly significant stock portfolio, loaded up on gold and silver, some cryptocurrencies, this things like that. So like my position, I feel like I'm doing quite well considering like the small amount of time that I've really had. Like a lot of people look at me and they're like, well, dude, you've had, however many years your adult life to do this. Yeah, but I really just got started just a couple of years ago. I mean, even when I started the channel, I was super broke, right? And it took me years before I finally got out of debt and being stuff on. So like I've only been operating for a few years here. And so like investing into places like Mexico or anything else like that is just like I hadn't really even considered that. I'm still just trying to build up the things that I have gotten started. All right, if you take your crypto and gold and silver and buy hard assets like real estate, that is how you will win the game. I agree with you, Dan Garcia, because I'm considering some of the things that I could possibly do. Like there's a piece of property that might be coming up for sale that I am looking at that I thought, dang, that might be my opportunity to try and do that. Like, I mean, I've been in my house for a couple of years now. I could rent this one out, get that other house if I could come up with the down for it and fix that one up or do something of that nature and then have two properties. Like that's how you start it, right? So I'm looking at that as a possibility. But most of the real estate in my area is so damn expensive. It makes it very frustrating to try and buy property here. I would have to leave the area. And having in more of an excuse than anything, but having a day job where I'm stuck here to show up at that job every day, if the property was like far away and I had to bail out to go to that property for whatever reason, that might disrupt the rest of my life that I have like already kind of committed to. So like having the property close to my physical location where I'm at is kind of important to me right now, at least, until I understand how it is that these things, until I. Understand the real estate game. All right. Hey, Simon, are you glad you bought the house now, considering rates and how values gone up? Oh, absolutely. Like I admitted that a long time ago that that was one of the best decisions that I had ever made, considering that I was so torn up over like the purchase of the house, like giving up all my money, knowing that the interest rates are going to go up and all the housing was going to crash, like knowing that at the time, right? And trying to face that and buying the house anyway was really difficult. Like it took a lot out of me. And considering that I had a foreclosure in my past, and this is what I was thinking, it was like, great, I'm going to experience the exact same thing that I had just faced, 10 years ago. And I bought the house, right? And it tore me up for a while. And then I watched the house value, like on the Zillow estimate, just scream higher, stupid, ridiculous numbers. It would go up more in a month than I could make at my day jobs, at my day job, my wife's day job, YouTube and bingo, like everything combined, it would still go up more than what money I could earn, right? And that was just like, I knew that was not sustainable, but it ran way, way up. Right. So now I'm looking at all this equity that's in this house that is far beyond anything that I ever thought that it would happen. I thought it was going to go the other way. And the significant amount of down payment that I had to put onto the house. Like I'm sitting in a position where like I am so far from being underwater, like so far from being underwater. Like people told me, dude, you're going to be underwater in a month. Like they were just calling me out, telling me I was stupid, all kinds of stuff. And I was reading those comments and agreeing with them. And it was terrible. It was a horrible mental issue that I was going through to face this, right? But at the end of it, it was awesome. Like it was not what I thought was going to happen. The house price went way up. I'm feeling awesome about having made this purchase. The family loves the house. I mean, it's just like everything about it worked out incredibly well, like way better than I had ever thought. And you know what's funny about telling that story is that I was talking with lumberjack landlord in Vegas, and he said that the amount of stress and frustration and anxiety and everything that he had faced when he bought his first house, he was feeling that exact same thing when he bought the 40th house. He said it doesn't go away. That feeling does not go away. He says after about 40, he says you starting to feel a little bit better about it. But he said every single property that he had ever purchased, he felt exactly the same way about, like this is going to sink us. This is going to like this is a dangerous position. All this other stuff that all the fear and anxiety and all that other stuff that comes with it. He said he faced every single time. Even at the 40th property. So it's just something that you're going to have to deal with, right? And I mean, I would think that it would be weird if you didn't have that feeling. So, yeah, I'm glad I bought the house. Very good, very happy. All right, what's up, folks? I'm not richer now thanks to BTC. I'm a lot richer now. I'm sorry. Question: would you agree Brody needs a? Okay, you know what? You're right. Where's Brody? Let's do that right now, if I can. Uh-oh, I can't seem to light up Brody's name. Oh, there we go. All right. All righty, Brody, you're now a moderator. Be wise with your powers. All right. Hi, Simon. Did you consider timber lodging cycles from the nature influence way? For example, there is a good correlation of timber logging and solar cycles and North Atlantic oscillation. No? 100 Mile House checking in, right on. That's very cool, man. CC. It's good to see you here, man. All right. Daisy chain your assets and shuffle your debt around, Simon. You know the rules. Checking in from your truck. All right. No, waiting for okay. Simon doesn't like driving the S10 because it usually ends up going 20 to 30 miles per hour when he does. All right. The problem with hard assets in economic downturn is if you lose your job, you better be resource rich. All right. I was buying BTC like mad at the bottom. You know what I picked up was Coinbase, and I know a lot of people don't really like that company or whatever, but I picked up a bunch of Coinbase, well, not a bunch, but a dollar cost averaged over the course of like 2023, about $50 a week into it. And that stock is up 250% right now. I couldn't believe how well it did. It was very surprising. All right, they're going to talk about the reason all the houses screamed upward was because of that software the realty companies used artificially inflate the market and spread across the market. Okay. Yeah, I agree. Like I kind of looked at it that way too, but then, all the real estate agents that I talk to around here are going, no, that's what the houses sell for. Right? And because there's a limited supply around here and there's a lot of money, so people pay a lot for them. And it's surprising. Even my buddy just sold a house that's not. I mean, his house is pretty nice. He's got a nice shop in the background. He's got a barn there that he was, raised animals in. It's a nice piece of property. It's landscaped well. But it's not too far off from what my house is, other than, the other outbuildings that he has. And he sold it for an insane amount of money. It was like $625,000 and it sold in like 2 days, right? He, I just like, I mean, I look at it and it's just like, dang, man. I mean, I think he bought the house for 250, or something. It was, quite a few years ago, 10 years ago or something. The key is to pay those hard assets off and not finance it. Do you have a home building skills? I have home building skills. I've built a lot of homes. All right. I'm being knighted. Yeah, that's it, Brody. All right, sweet promo, Brody. Welcome to having a job. All right. After you set up with a house to live in for the rest of your life, if you want to continue to invest, then that is the gamble. There's no such thing as an easy money. Either you are physically slaving away for it or mentally. No, you're absolutely right about that. I mean, I'm going to give this probably another 25 minutes, guys, and then I'm going to bail. But I absolutely agree with that. Like I used to have like I did physical work for a long time. I did construction. I've worked building supply industry for a very long time. I did a lot of physical labor, and I was good at it. Like especially building homes. Like I really enjoyed framing houses. Like that to me was just like the funnest thing that you could ever possibly do in a summer. Right? I mean, summer out there in Seaside, right on the beach, framing up like the condominiums and stuff that we were doing was such a cool job. Man, I loved it. I would do that every day of my life if the weather was that nice. But for the most part, framing in the Pacific Northwest sucks because it's raining 9 months out of the year. So you're always cold and wet and miserable and having to deal with that, right? And so like, but the physical part of things, I loved it and I would work really hard at it. The only problem that I was facing during those times is I would work physically really hard and then mentally go to pleasurable experiences like getting drunk and stoned and whatever. And I would undo everything that I had just did as far as my physical work goes, right? So I think things very differently. At the end of the day, when I'm done with my day job, I go right into more YouTube stuff, whether it's thinking of the next video, doing research, trying to answer emails or whatever it is, replying to comments. It's all about like being in that constant strive for excellence. And what I found is that if you're in a constant move for excellence, this is what's really crazy about it, is that you end up like you end up getting excited and enjoying that pursuit more than just about anything else out there. Like, a lot of people would say like get a kick out of like I don't know, like I'm just gonna pick something really mellow like gardening, right? Like you get a kick out of gardening, you garden all day, but then when you're not gardening, you feel like you want to garden, right? Well, that's what ends up happening when you're pursuing business and excellence is that the moment that you stop doing it, you start feeling like, man, what am I doing here? I'm not I'm not doing the things that make me feel good. Like I feel good when I'm like pursuing excellence. That's where I'm getting my dopamine hits from, is like, getting the next sale done, getting the next, whatever. And when you shift that from pursuing excellence to pursuing pleasure, you're watching TikTok short videos, or, getting stoned or drunk, or watching movies, or even watching sports or something of that nature, right? What you're doing is you're chasing pleasurable experiences, which then undoes the excellence that you had been chasing. Now, very, very, very interesting thing that happens when you chase excellence like all the time, like almost exclude the pleasurable chasing out of your life, and you just go for excellence. What happens is pleasurable things start falling into your life, like without even knowing it, like not even trying. All of a sudden you get these pleasurable experiences, and you're like, whoa, that's cool. Where did that come from? Right? Like getting invited to Vegas to go speak on stage, to go meet G. Edward Griffin, to go have lunch at Hell's Kitchen. Like all that whole experience and everything was just incredible. Like I don't mean to knock the conference. The conference wasn't as good as like Zuber's conference. I think Zuber's conference, like the one rental at a time conference, was absolutely amazing. The energy there was far better than any other conference I had ever been to. But still, like being at that Silver Symposium, it was a really like almost a surreal experience to be able to sit next to like my hero, essentially, the author of the one book that just exposed the Federal Reserve to so many people, to be able to have that experience and never even like trying to get there. Like I wasn't trying to do any of that. It just was happening, right? But it was my efforts going into trying to create the YouTube channel, to try and make these videos, to try and, understand these theories and to express these theories into the things that I see. That's that chasing of excellence started bringing all the pleasurable things that happen. You know, it's absolutely like it's almost like magic, right? But then you understand why it happens that way. So now I don't even like the idea of going for pleasurable experiences. Like I don't even try to find those in my life. It's so odd to even think. Like I'm not trying to deny myself pleasure, but I just don't pursue it in any way, because I just find that so much of it is offered to me when I just go for excellence. And so I just try to just strive for that as much as I possibly can. And I find that when I do things that are what would typically be somewhat entertaining for other people, like watching movies or TV or something, I can't stand it. I am completely bored. I cannot, like, I start feeling like I'm not doing anything, and I need to get up and start, doing my thing with, research or whatever it is. And it's kind of I don't know if it's a downfall or a benefit, but, that's the way I live it. All right, I have mod powers, but I still haven't figured out how to use the to direct messages as someone else. Yeah, of course they did. All right, laugh out loud, Brody. I use the and then type their name just as it is in the chat. It's got to be identical. All right. They tell you a fish is a shark if it made money. All-nighter hider. This new job Simon created is just giving the Fed more of an excuse to maintain elevated rates. No easy money until you get $1 million in cash. Then it's all easy. Did I do it wrong? All right. There's three types of income: income portfolio, income, and passive income. I'm trying to build passive income and a portfolio income the most. Yeah. And see, like, I think I'm doing fairly good at trying to build up like the passive income. That's where I think this YouTube channel really does it for me. And then building up the other portfolio, like my stock portfolio. I mean, I don't think I doing well on Altria as far as the purchasing of that and the timing of it, because I'm, down about 5% on that particular stock. But the dividend payments is really what I was looking for, and those have done fairly well. I mean, it has a decent dividend yield to it. I would love to fill the stock portfolio up with a lot of that type of thing. Something that is just sitting there, that just casually spits out cash every once in a while, and not really having to worry about maintaining, like, fixing the plumbing in a house or a roof or something of that nature. Like to me, that is like the ultimate of passive incomes. But really starting businesses or creating courses, something that would, that could be sold or not necessarily like having to be worked like a 9 to 5 kind of thing, but just have out there available for sale. Again, I think that's like, kind of the direction that I'm really wanting to go with it. A lot of people just want to strictly look towards investments. And to me, like, I thought about it. Investments are definitely what I want to be, involved in. But like the biggest thing that I really want to invest in is me. Like, I want to, advance my skills, my opportunities, what it is that I have, available to me, doing things like, bigger speaking engagements or, putting on conferences myself, conferences that are for profit, stuff like that. That to me would be like, wow, man, what a job, right? All right. My dopamine comes from a mean ginger turmeric and mandarin tea with fresh buttered bread smothered in egg yolk. Wow, Eli, that was a little descriptive. Pretty good. Uh, BTC up 200K. I'm buying a sports car. Which one should I get? You should get a Camaro. All right. Was great seeing you wear the. You love those shoes, don't you? All right. I don't even listen to the music or watch my movies anymore. Chasing excellence is just a natural now. I love the new me. Yeah, I agree with you, all nighter, man. That's me too. Like the only time I ever listen to music occasionally is on my drive to work. And, that's like usually it's like a classic rock station or something like that. But that was the last time I actually like tried to listen to music as I drove to work and I turned the radio on. And normally I'm listening to some, either a YouTube channel or something of that nature on the way to work. Like, I very rarely like am I doing entertainment kind of stuff. And so like that's where I found even like I've actually had to force myself to go out. Like I tried like once or twice a week to either go out and shoot pool or something like that and not do like YouTube stuff. Um, on the weekends, like I've been taking the family bowling, for a little bit. And again, like, just actually enjoy the bowling thing. Like, it's fun, it's okay, like enjoy it and have fun. Because like somehow, like over these years, I literally feel like I've lost the ability to have fun, like can't think of fun things to do. All right, completely agree, Simon. All right. Music is great, Hyder. Okay, guys, let's see where we at here. I thought markets are supposed to be efficient. I don't know. I can help with logistics on the conference, Simon. Get off your tush and hit the road. Benny, I don't know, man. Can I deal with the constant torment? I mean, chasing exigence is where it's at. uh, Simon, do you still feel the Fed maintaining rates at their current level unless there is a serious economic shock? If so, are their markets wrong? Yeah, I think the markets got it wrong because they're all based off of the narrative that's coming out of the Federal Reserve as far as that idea. I think that they will give up some interest rates, right? They will lower interest rates at least somewhat. And but I don't feel that that is so that they could have some kind of market condition that they are looking for. I think that's more to establish the credible threat that they would actually do it, right? And so once they have like lowered rates and convinced everybody, yes, they will actually lower rates, then from that point on, they can use their credible threats again to whether or not they're going to maintain the level of rates or continue to drop them into the future. I doubt after that they would raise rates. Like to me, if they were to raise rates after lowering them, then that would like really shock the markets into believing that or start losing confidence within it. If anything, like right now, the Federal Reserve would maintain those interest rates if they were to truly feel that they needed to create a situation within the economy where those rates would be very impactful, I think that they would probably maintain them. But the lowering of interest rates, I think, is more to establish a credible threat. Does that kind of make sense? I don't know. But that's the way I kind of see it, is it's like, I don't think that they want to lower rates at all. I think the economy, considering what is going on right now with the unemployment, is very much in line with what the Federal Reserve is looking for. Like, remember, they're mandated to do two things: low and stable prices and full employment. And as long as everybody's working and the prices are coming down, they're good. Like, they're 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 good, you know? And so, like, why they would want to mess with that is not something I mean, I don't know why they would want to screw with that whole thing, considering that it's like right in line with what it is that they are shooting for, unless they wanted to establish that credible threat to be able to use their words going into the future to then, dictate where monetary policy is, going to be. But that's really what I feel is like the dropping of interest rates literally would be establishment of the credible threat that they would do it. Otherwise, people may not believe it, and may not consider that it to be a real possibility. All right. Oh, you'd enjoy it, Simon. Oh, I bet I would, Benny. You seem all right. Even a crappy job task can be fun with a like-minded person. Absolutely, it can. All right. Lots of laughs and getting work done. Oh, now you're trying to go into being sales, huh? Trying to win me over? All right. All right. Have considered doing 30-minute live streams. Yeah, and that's really what I should be doing, is 30-minute live streams as opposed to these hour and a half ones, because the YouTube algorithm really loves 30 minutes to 45 minutes, but this is what we did. Anyway, I gotta go, guys. I got things I need to do today with the family. We are going to go pick up some recliners for the house. So we have some new recliners, and I didn't buy them new. I got them from my family. So they have some furniture that they are getting rid of, and I'm going to get those today. What else am I doing? I think that's it. That's the only thing I really have planned for today. So, new recliners. New to me, anyway. Uneducated Economist. You guys let me know. Before I hang up, thank you all for being here. We have 118 people watching right now with 87 likes and $24.98 in super chats. You guys are always so supportive. Thank you very much for this live stream. It was a lot of fun just discussing some of these things, especially like the whole sponsorship of the channel and all that. Benny, I would actually consider that, bro. You seem pretty cool, and I do enjoy a lot of the comments that you leave. So, all right, guys. Uneducated Economist, you let me know.